What's up, everybody? I thought today I would make a video on how to read price action better. Um, Pretty much, I use this approach all the time. I think it's absolutely critical to be successful in trading. My opinion is that the edge doesn't come from your entries and exits or what type of you know moving average or whatever you use to get in the trade. It all comes down to understanding which phase you are in and which phase you have an edge in. And I saw someone make a similar video to this recently. I loved it. I thought it was really visual representation. I thought I'm going to share my viewpoint on it because this is really where I have developed edge. And the great thing about this isn't just something that you can exclusively use on the Nasdaq. You can use this in any volatile market because this essentially is just how price move. This is how people trade. And what I've seen over the past year or so is this sort of like new language come out of liquidity grabs or supply and demand replacing essentially false breakouts and false breakdowns and support and resistance. You've got ICT trading, smart money concepts, all of that, which have become really popular. All those concepts are the exact same concepts from 5, 10 years ago, just worded differently. The idea of a fair value gap, all of these different concepts, it doesn't really matter what you use. The critical thing is to understand how to identify the different types of market phases you're in, whether you're in like an accumulation phase, a directional trading or trending phase. It really doesn't matter how you then enter. What is critical is to understand how you can use these different phases to identify when you have an edge. You can be a breakout trader, and as long as you understand the correct points to trade a breakout where there is a high probability that breakout is going to work, then you can be successful with it. If, however, you just try to take every single breakout or breakdown, you will not be successful with it because, as we know, most breakouts fail. The reason for that is most breakouts occur in situations where there is not actually an edge for it to go higher. So I'm essentially just going to share with you kind of like how I look at price action, the different cycles in the market, I suppose. And yeah, I think this is pretty critical. You can use this on anything that's volatile. The Nasdaq, I'm going to show some examples on the Euro US dollar, and I'll also bring up the daily chart of the Nasdaq and maybe even some really um, high volatility in the small cap world to show how it works there as well. So yeah, let's jump into it. So for me, the way I look at the market is there's two different types of phases. One is accumulation or chop, which is this sort of like sideways period here. And the other is when you have a directional period or a trending period, which is essentially this here or this here. And typically what you're going to see is that market doesn't just trend forever, and it does do this sometimes, but it rarely just sort of goes trending into trending. You don't see this very often. When you do, these V-shaped reversals, they do happen, but they're not all that common. Normally what you will find is that you'll have a period where we're trending, and then you'll have a period of accumulation, consolidation, and then from that you will have either a continuation to the downside or a reversal to the upside, and then you start a new directional trending market. And here obviously it's super clean. We've got very clear different periods of accumulation. In the real market it's obviously not quite the same, but this is really all you need to look for. And realistically, if you were to look at something like smart money concepts, they might go, we've got a liquidity grab happening down here. Maybe there'd be a fair value gap that was forming in here somewhere. And you could go, well, you could just buy off of this and buy this. It's the same concept, but it's understanding when you can use those concepts. Some traders may say, well, we've got a bit of an inverse head and shoulders here. That's more of the language that I understand from years of trading previously. Or we've got a double top here, or we've got some flags here. it doesn't really matter how you look at it, it's just being able to understand how it works. So the way I use this is I try to identify areas of accumulation that where you've got kind of like similar lows or similar highs. So we can see here I've marked them out in blue where we've got similar lows or similar highs. And what this tells me is when we've had this clear downtrend, this directional trending market, when we begin to fail to make significant new lows, or in this instance, we fail to even make a new high, what this means is that the sellers that were all really strong during this period here have now weakened off. And that doesn't mean they've gone away. It doesn't mean that every time you see this, you should begin buying. But what it does tell me is that that strength is now not not guaranteed to be there. And what then happens typically is you begin to get a lot of traders who didn't participate in this downtrend beginning to predict which way the market is going to go. You begin getting people buying in here. You get people, um, shorting the breakdown here. You get people shorting, this little bounce here. And this accumulation phase can sometimes go on for quite a bit. And essentially, you're finding you're finding a lot of traders getting themselves trapped, which is then essentially creating, to use a new a new day term, the liquidity, I suppose, for it to go higher. And I really love it when you have clearly trapped traders, when you have something this false breakdown that can fuel a bit of a short squeeze. But really, what this is it's kind of like a bit of a tug of war to find out who wins. And when you then find out who does win, all the losers give in, but also the side that wins, the buyers come in really strong. In this instance, the spot one down here. Now, I made a video a couple of months ago on don't essentially don't join in the battle, and I think that that is a really important concept. If you find yourself trying to guess which way the market is going to go, if you find yourself trying to short this or trying to buy the bounce, you are more often than not going to get stopped out in a chop because you are trying to predict who wins. For me, the way I like to see it is during this accumulation period, at some point you are going to find a level that is tagged a couple of times, and if it fails to break over that or break below that, and then we begin seeing the other side begin to take control, you have a pretty high probability that if you can get in the point where um, you know in this instance buyers are really likely to come in, probably in the form of shorts getting stopped out, but buyers begin to chase this, you begin to get a really high probability that you're going to get at least some kind of move higher. It's not always going to happen, but typically I'm finding this kind of setup is working like 70-80% of the time, because you're identifying a situation where there aren't, we've seen through this that the sellers have dried up. We've seen through this that the buyers have kind of shown that they're a bit stronger, and then you buy into that strength. When you see that strength confirming, you've got all of the attributes you need for a move higher. And as you can see in this example that I've drawn out, we then enter a new sort of directional trending period. And then we get the exact same thing here, where again, we've been trending for a while. We put in a double top. This is the accumulation phase. Can the sellers, can the buyers continue to hold it? There's this period here where it goes back and forth. And when that fails and the sellers now have control, we're in that same situation as down here. Can they continue to have control? And when they do, there's a really high probability of them moving the market lower. And this is again exactly the same as all the different concepts you see out there about you know looking for liquidity grabs and all, essentially everything that you see out there. This is the simplified version that you kind of just need to understand. We have down here again these lows, this area here. Maybe this would be a liquidity grab. Maybe it's just that there's a lot of buyers down here at this support level, and therefore market makers are pushing them down. Who cares what it does? What we're waiting for is an accumulation period to show up to see which side is able to be stronger, which side gets stuck, and then when that side kind of proves itself, you can begin looking to go long in here and pushing higher. So obviously, this is very much a kind of like a perfect diagram, if you like. But I'm going to show you really quickly on NQ um, how you can see this from a practical point of view. So this is the 800 tick on the NQ. If you've seen my trade recaps recently, you'll know the strategy that I trade pretty inside out. But I just wanted to go through that same pattern, how you can use it in real life. So we have here the trending periods down, and then we have our accumulation period, which is in here. And during this accumulation period, we're essentially getting buyers and sellers fighting for supremacy. Who's going to win out of the two of them? And what we see in this instance is the buyers take back some form of control. The sellers, especially like this really nice little false breakdown here as well. But then we get this really nice pop back up. We put in a higher low, and for me, this is now a really nice entry opportunity because we're in a situation where, although yes, we are near the the highs of the day, and there's not a guarantee of a breakout, we've put ourselves in a position where we've seen the sellers have tried to take us lower and they failed on multiple times. We've had that accumulation period, and what happens after accumulation period? Well, when one side wins, they're often going to go for a trending period. Now, I'm not well versed enough to understand liquidity grabs or anything like that, fair value gaps, but I'm sure that those of you who are could probably pause the video now and identify where they could be, and would probably be able to find trades. But it's understanding the concept of, hey, look, we've put in this area that has been tagged multiple times. We put an accumulation phase, which suggests that we're going to have a lot of sellers stuck in the trade. And then when buyers come in and show some strength, we then get that move higher. Later on in the day, we had exactly the same situation happen where we had the pre-market highs, a double top. We then get an accumulation phase, and that accumulation phase in this instance looks a little bit messy. We had a pretty tight accumulation range up here, and then you could also say that like this whole area here was accumulation phase. We get this lovely attempt, this sort of almost like a false breakout here. Just get rid of those. You get this like you get this flag break that fails to go higher. So we now know that we have these trap buyers in here. And it's not to say, I'm not necessarily looking for trap buyers. I'm just looking for an accumulation period where I can understand why buyers would be interested. And when that fails, it means that the likelihood is, and I'll just put in where I took this trade here, the likelihood is when we get that lower high and sellers have shown that they are stronger than the buyers here, that we are likely to get that next trend. And as you can see, this is the exact same pattern that I drew earlier. Now, sometimes you don't get a pure reversal that happens, and instead you get a continuation. And we can see here that you get this because we've had this downtrending period. We now enter a period of more accumulation where you've got buyers and sellers fighting for supremacy. I can see why buyers would take this. We actually had a pretty nice trend break here with some strength. So people who are just trending random trend lines, they are probably going to be having all of these different trend lines drawn and saying, look at this, lots of buying. This is going to be the move higher. Maybe some people who are drawing channels or even, drawing it like this and saying, yeah, we're breaking out of this to the upside. That's great, but that's all predicting. That's just using lines on a chart to predict something. Wait until you have that accumulation phase, and then once we've had that period where buyers have tried and failed, we've had that accumulation, well, what you can then do is simply, again, wait for one side to take supremacy. I would have been absolutely fine here, funnily enough, taking a long if we'd had this accumulation phase but in a higher low and began going higher. I'd have been absolutely fine with that. But in this instance, we didn't. We had that accumulation phase where we couldn't push above that area. You can see again that once we had this, lower high, sellers in control, there was a bit of a trend lower. You could have got in a bit earlier as well. So that really is, all there is to it. I'll go over very quickly yesterday's price action as well because there's some really clean examples yesterday as well. The first one was probably the cleanest, where we had this nice downtrending move, and then you have a really nice area of accumulation. Okay, and this is where sellers are trying to take control. We have it in particular here. This is a very good reason for sellers to get short. Another good reason for sellers to get short. But then when both of those times fail and the buyers come in and show they have some control, it means the likelihood that they begin pushing it higher is very, very high, because we've had this accumulation period where sellers have got involved in probably big numbers here looking for this to move lower, only for it to not do that. And this move here, very, very clean. This is a very, very strong, clean move. It ran about 30, 40 points in a few minutes. Very easy trade and very predictable. And then later on in the day, after we had some pretty big news, we had the same situation again on the reverse side this time. We had this previous area of resistance. It comes into that area off of a pretty strong trend. So we've got this uptrend. We have an accumulation period where one side is going to try to battle it out, take supremacy. We have a really nice false break to the upside. So I can see now why buyers are enticed into this. And when that fails and it gets below the 50 EMA, we get a really clean downtrend. So this is just honestly price action 101. Just really quickly, I'll bring over TradingView and we can have a look at the Euro USD. This is the 1 minute. I haven't really looked too much into this, but I know it does work on Euro USD. We can see here we had a period where the market had this accumulation period. Again, if we kind of like zoom out, we've had this clear downtrend. It's not been the strongest downtrend, but we've got a clear downtrend. Now we've entered this phase of accumulation where sellers and buyers have had essentially a battle to see who's going to win. Sellers have tried and tried and tried, and once they have failed, we can begin to see at what point am I expecting the buyers to really, if the buyers come in and they begin winning, well, they hold the 50 EMA. If you got long around here, it then starts a very clean uptrend. And then later on, we had the same situation in reverse this time, where you have had this strong uptrend, very clear uptrend. Then we have a period of consolidation, accumulation, however you want to describe it, liquidity grabs, I don't care. We have this sort of like this false attempted move higher. So we've got lots of reasons for the buyers to be involved. And when that fails, the likelihood that we get a move lower is really high. So you could have got short, honestly, any point here. This is where it gets tough, because like I'd have probably taken a stop out there. But then in here, if you got short in here, look how clean this move is. It's so honestly, it's kind of easy to begin seeing this again and again and again. It's not complex to understand. I haven't looked back any further. I haven't got any concrete examples, but you have the same kind of thing here, where you have, and we have this a couple of times. We have clear trend, accumulation periods. So exactly the same thing. Clear trend, accumulation periods. When the buyers fail and fail again, then you get clear direction again. And then later on, you get the same thing, a little bit different because I guess this is maybe a market open, I'm not sure, but you had the same concept where you had this long period of accumulation, and when that failed, sellers took control. Look at the move we then had lower. It was an insane move. So this is, I don't want to spend too long on this, but you can see the concept working out again and again. Wait for that accumulation, wait for an area to essentially fail, and then you're good to go. I'm going to bring up real quickly, I looked at OMGA, which was a stock, and for those of you who trade the Nasdaq futures, you're going to look at this and go, what on earth? This is a penny stock. This is a piece of junk. How can it work there? There's volatility in this, and I don't know, if always the 50 EMA is going to work or whatever, but you can see the same concept applies. We have a clear downtrend. We enter a period of accumulation down here. Sellers are trying, they fail. Okay, it's accumulation. And when that fails, it puts in a higher low and the buyers become strong. We then get a very strong move to the upside. You get the same concept later on as well, where you get another kind of accumulation period here where it sells off. You get accumulation at a previous low. Once it gets above the 50 MA, you get a pop higher. And then again, you have this same kind of like the high area, accumulation, sellers come in, buyers can't straight back in, and we get that downtrend again. So you can see like it doesn't matter what you use. I'll show one final example on the daily chart on the Nasdaq. This is the daily chart pretty much from last year, and in this example you can see we had strong trend higher. We entered a period where it began to consolidate, go sideways in here, failed a few times, puts in that lower high, you get short here, you get a quick move down. Same situation where you had this support area, we've had a strong downtrend, consolidation period, it holds, it gets above, it didn't in the end pull back, but you can see again the same concept on this bull flag, and then we've had this big move higher. There's no such thing as the holy grail in trading. There really isn't, because a lot of people, what they're trying to do with a holy grail is to understand their perfect indicator that will tell them exactly how they're going to make millions with minimal effort. I don't know if it saved my drawing or not. Looks like it didn't. Oh well. They're looking for that magic indicator that gives them the some way they don't really have to do anything. That isn't a thing, but what is a thing is being able to understand very simple price action, understanding what phase you're in and where you have an edge. What I would encourage you to do is to go out and look for, essentially just look for these accumulation periods after a double top or after an area of support. When you get these accumulation periods, wait to see which side wins, puts in that higher low, and then, being brutally honest, at the moment, 6 or 7 times out of 10, you get a pretty solid move. About 7 or 8 times out of 10, you're going to get some kind of a move. 3 or 4 times out of 10 at the moment, in the current market on the Nasdaq, you end up getting a really significant move. So go out there and have a look for yourselves. Try to identify these areas where you've got accumulation at previous area of support resistance. That's honestly, that's kind of what it boils down to. Look for an area of resistance to develop. That will create some accumulation. Wait for the other side to kind of win, and then look at the move that happens afterwards. And it's exactly the same to the downside as well. Just look for a previous area. It looks for an area to act as support. And then if you've been put in a higher low, it's easy. But also at the same time, if you have that same situation and instead you have this happen and it kind of just continues lower, well, you might end up in a situation where, you know what, putting in lower highs, the potential for that continuation to the downside is really high. So get out there, have a look at it. That's all you can really do. I hope this helps in some way. Don't spend loads of money on courses that promise a simple strategy or a combination of indicators, because they don't work. Get really good. Become as good as you can at understanding what price is doing and what phase it's in. Are we trending? Are we accumulating? If we're accumulating, are we accumulating with a clear support or resistance, or are we just very, very range bound? If you're very range bound, like we were in the week after, like this here, this is not something you want to be trading. Obviously, it's very, very range bound. It's accumulating the whole time, but with no side winning. What you want to do is wait for this here. I'll give one final example. You've got a very clear downtrend. This is about as clear as you're going to get. You get a beautiful accumulation phase in here. Double bottom, accumulation phase gets above. There's a long there, which you could have made a bit of profit on. And then you get the same thing here. You have this longer period of accumulation, gets above the 50 EMA. There's the flag. And now we start an uptrend higher. So it's a simple strategy. It's based off of understanding price action. I know I went a little bit maybe a bit too far into my approach personally. You can, of course, trade with the trends. There's many ways to do that as well. But I would just encourage you to go out and get really good at identifying those accumulation periods and then seeing what happens afterwards. So hope you enjoyed this, hope you found it useful, and I'll see you again in the next video.